Joining us now to discuss Bitcoin and more is CoinDesk markets analyst Damanick Dantes in New York. Hello there, Damanick. Thanks for joining us. So, would love to hear your reaction to the latest minutes from the Federal Reserve's January meeting and its impact on price. Is that why we're seeing perhaps a bit of a rebound?
Yeah, I mean, it was no surprise, right? Nothing really there. But I think traders are looking forward to March, and that would be the pending rate hikes, probably about 50 basis points or so. A lot of that's already priced in risk markets, equities as well. We're seeing sort of from the Treasury market, at least, traders are expecting the yield curve to invert within 6 months to a year. And typically within 6 to 12 months after that, you expect a recession. So we're in this sort of slow growth environment. And I think that's kind of a headwind for risk assets. And then also it's not just a rate hike, right? It's the phasing out of the balance sheet. And typically when money supply decreases and you get some of that tightening, that tends to drain liquidity from the markets. And that can be also another headwind for risk assets. But right now, because all of that's kind of priced in and we've been in this range bound moment, there's been a reduction in leverage. What happens then, it tends to benefit very short-term traders. So we're seeing some of the positive moves on intraday charts at least. And hopefully, we'll see if that's sustained in the days ahead.
How do you see Bitcoin reacting to all the geopolitical risk out there with conflicts, geopolitical tensions rising along the Ukraine-Russia border?
Yeah, that's created a lot of chop in the charts. We saw the sell-off on, Friday? We kind of dipped below 43K in Bitcoin. And then Monday, it was kind of like an about face, and Tuesday at least too, where Russia was sort of still being active on the ground, according to NATO officials today. And then the prior days, we heard like there was some sort of de-escalation. So it's been very, very confusing for a lot of analysts and traders, and we're seeing that reacting in the price. But overall, we saw that the traditional safe havens like gold, the dollar were bid up during the geopolitical tensions, and now they're kind of pulling back. So it's been a tit for tat, and the market's just kind of trying to reconcile that. But overall, we've seen the correlations rise between equities and crypto. So it's showing that there is some reaction to the geopolitical risks.
Yeah, there's a lot of choppiness out there. Traders must love that volatility. I see that you have for us a Bitcoin dominance chart. Tell us what your analysis is of Bitcoin dominance.
Yeah, so that chart just shows the Bitcoin's market cap relative to the total crypto market cap. So typically when that Bitcoin dominance ratio declines, like what we saw most of the way through 2021, that's when altcoins were very much in favor. And it indicates that there was still appetite for risk because altcoins have a higher risk profile relative to Bitcoin. So Bitcoin is kind of seen as a safe haven within the crypto space. However, that ratio kind of flatlined or stabilized between May and September of this year, and then heading into September of last year, and heading into this year, that ratio started to pick up a bit. And that shows some fear on uncertainty in the market. Traders tend to rotate back to Bitcoin and abandon some of the altcoins just to reduce some risk. And that's consistent with the leverage reduction that we're seeing in the futures market. So there has been some caution. My area of concern is that ratio is now a little bit above the 2018 lows. And if you remember 2018, we had that bear market, which was also when we had the taper tantrum. And that showed that the Bitcoin ratio tended to dominate then as traders reduced risk, and it was sort of a down market. So there is risk that move up can be sustained, and that would be pretty negative.
So let's look at the sentiment out there. Bitcoin Fear and Greed Index. Tell me, what are we seeing over on that side? It's rising.
Yeah, so that measures sentiment in the market. And the Fear and Greed Index has risen from the extreme lows like what we saw in January. So the sell-off obviously created some fear in the market. And that was very similar to what we saw during last year's correction. If you can see on that chart, around 10 to 20 was that low range, and we kind of were around that recently. That pickup was consistent with the latest price jump that we saw. However, the latest reading dipped back into 46, which is in fair territory. And that's the reaction, again, to the geopolitical risk, some of the uncertainty regarding macro. And if you remember, like back in 2018, this ratio can fluctuate very wildly between fear and greed very quickly. So it's not a sort of smooth indicator. It's very kind of erratic, especially during times of uncertainty. So it's less timely than what we saw in the previous year. But it's something to monitor for short-term traders, at least within a downtrending market.
And Damanick, you are our CoinDesk expert technician. So in the short term, where do you see Bitcoin support and resistance?
So support right now, minor is around 40K. When I say minor, it just means that it's very short term in nature. But then just stronger support back around 35K, which was where the recent local low was on the chart. 30K is pretty much that stop point at least. And then resistance has been pretty strong around 46K. There is that potential of maybe 50 to 51, but upside seems very, very limited for now. Long-term indicators like long-term momentum has dipped negative on the monthly chart, and that's very concerning. But over the short term, we might see some chop, but within that range of 40 to 46 is what I'm watching.